Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here in studio above the iconic trading floor. And it is shaping up to be a big day at the stock exchange as one of the world's biggest business technology distributors is set to return to the public market. Ingram Micro shares are going to reopen for trade after the company was taken private back in 2016. And most recently, private equity firm Platinum Equity owned Ingram. Well, the stock is going to trade under the ticker symbol INGM, and I'll share more about the company as we approach the opening bell. But for now, let's take a look at what's on tap. Well, after pricing shares at $22 a piece last night, Ingram Micro raised $409 billion. It's now valued at more than $5 billion. A former floor trader turned global strategist is going to join me for a look at the markets as Ingram prepares to return to trade. And the WNBA's New York Liberty today get their moment in the sun. The official ticker tape parade starting here in Lower Manhattan comes after the Liberty beat out the Minnesota Lynx in the finals on Sunday. And a production executive is going to join me for a taste of what's in store after the team celebrated the opening bell at the stock exchange yesterday. Well, we talk a lot about technology on our show, and a key analyst in the space, Dan Ives, is also going to join live as Disney's CEO succession plan begins an extended undertaking and after Tesla earnings last night. All right, well, stocks by and large take a breather this week. I do want to bring in Jay Woods. He's a chief global strategist at Freedom Capital Markets. Jay, good morning.
Hey, good morning. How are you, Kristen?
It's great to see you this morning. We see futures pointing to a mixed open, rising a bit on some of these indexes like the S&P on the back of those Tesla results last night. But we had seen a healthy breather earlier this week. What does that signal to you?
Yeah, usually before the election, the end of October, we see some seasonal weakness and then some, people waiting to see how things are going to shake out come the first Tuesday in November with the election results. So I don't think the recent sell-off, 2 consecutive down days in the S&P 500 for the first time since September 6th, is anything to be overly concerned about. Like you said, we're watching earnings and we're getting pockets of earnings here and there that are moving the needle. There are 3 stocks that are down this morning, so the Dow may be down, but the S&P will be up, and Tesla being one of the bigger stocks in the S&P 500 is one of the reasons why.
We are approaching that peak reporting season. Next week, it's really going to ramp up, of course, with some of these technology names, but by and large, Jay, you mentioned companies are exceeding expectations. Any particular takeaways from earnings season thus far as it relates to the consumer, the overall health of the economy?
Well, the economy and these companies continue to do well. Some of the stocks that have done well, but didn't really follow through, like a GE, which was up 90% this year. IBM, which trades right down behind us, was up over 40%. They had solid earnings. They beat on EPS. The revenues were in line or slightly light, or GE's case, the sales numbers didn't hit. These stocks aren't getting that extra momentum to go higher, but it's hit or miss. It's not the tide lifting all boats right now. It's not one sector taking every stock with it higher. We're seeing pockets of weakness and strength. So it's a stock by stock basis, and I think that's fine. And then once we get through earnings season, then we'll see more of a rotation into specific sectors and not just individual stocks. So right now we're watching earnings as they hit consistently. And you mentioned next week. My goodness, I think 35% of the S&P 500 reports next week.
Right. So Tesla shares set to open higher by 15% before this after-hours pop yesterday on the back of the better-than-expected results. We had seen Tesla with a market value of about $678 billion. How big is Tesla within the S&P that can cause it to move the needle for the overall major index?
Well, it is a Magnificent Seven stock for a reason. It was one of the 7 biggest stocks, market cap-wise, But it doesn't have that $1 trillion valuation. And Musk talked about this on his press conference or his conference call. He expects them to be a $30 trillion company. No timeline, but he's focused. The car sales went well. It was a solid quarter for them. But he's focused more on the AI story, the robot story. And the stock is trading up, but it's still not back to those levels before that robotaxi event. So I want to see if this rally can continue. And I know you have Dan Ives coming on later, so he can tell you a lot more about Tesla in particular than I can. So
I know.
But it does move markets, and it's important to watch because of its high weighting. It's one of the top 15 market caps in the world, if not I think it's number 11 before it opens today.
And certainly, of course, this pop pre-market is going to help that, as you mentioned, Jay. So we've seen Treasury yields rise on the back of what's been some pretty solid economic data. Does that push back your own expectations for when we might see deeper rate cuts by the Fed?
It does raise an eyebrow, and if I could do that rock eyebrow raise, I would do that right now for the camera. But no, the rise, when you get that first rate cut, usually it's already baked in, and that's why we saw rates start to rise. But to 4.25%, I don't think many of us here saw that coming. Hopefully we get a little bit of a pullback. I'm starting to get concerned that it can stay higher for longer again, and this higher is now 4.25%. We're used to 5%. We're used to 4.5%. The market is showing it can digest that, but something's telling me that the Fed, they don't believe the Fed is going to cut by as much as they said they would, 1.25%. So let's see what happens next week. We have a lot of economic data coming out. I think the rate should stabilize here at 4.25%, probably pull back. But if we continue this uptrend, yeah, I'd be a little concerned it will have an impact on equities going forward.
Yeah, I know you look at the fundamentals so well. Frank Capillari, a technical analyst, is going to join me just after the opening bell to look at what some of the charts, just the chart patterns, are indicating. So we're going to talk to him about that yield as well, because we haven't seen it that high, I think, since 2020, 2022.
Well, yeah, we haven't seen it that high since we started cutting rates, and it goes back, May, I think 2023. But the fact is, Frank, you got a great guest, and Frank, I wish I could stick around and see Frank talk about the charts. He's one of the finest, and I can't wait to see what he has to say. But the rates. It was the rise in rates and the quick rise in rates that have us a little skittish, but the market has handled it well. Like I said, this is just 2 down days in the S&P 500. We're still within a stone's throw of all-time highs. And October, especially going into election, we see a pullback. We see a pullback on average of 5% over the last 4 elections, 2 of them involving the same candidate we have now. So this pullback to me is just a garden variety pullback, and what it will do is it will set the stage for us, hopefully, to rally into year end once we get through it.
So let's talk Ingram Micro. This company, one of the largest IT solutions distributors, set to return to the capital markets today. What does it say about the health of the pipeline that this company is ready to rejoin the trade on the floor?
Well, first of all, it's exciting that they're back and they get to come here and ring the bell. It's going to be a good day for the company. It priced above the midpoint of the range, $5 billion valuation. So congrats to them. What does it say about the overall market? It says companies are ready to go public. A lot of people have been waiting on now. There's always an excuse. Well, the market wasn't doing well. We're at all-time highs, so they saw this as a good opportunity. Some people worried about the election and they want to wait, but no, I think now is a great time for companies to go public. This market has been slow and steady up. It's kind of boring, and you want a boring bull market to really come to market, and so far it's been received extremely well, and should be an exciting day for the company.
Have you noticed any trading patterns around the election? We're just a little under 2 weeks away from the presidential election at this point.
Yeah, we've seen, I don't want to attribute one thing to another, but as the polls change, you see some Trump-sensitive sectors do really well. Defense sectors have done well, but I don't think that matters who wins this election. They're pulling back a little bit on some weaker earnings. This week, Elon Musk is an interesting person to watch. Anything he touches now has a Trump tinge to it. So we'll see. Trump election could bode well for him, and Tesla did run up as his numbers did as well. And then the tech sector. The tech sector did well under Joe Biden, and it continues to stabilize, waiting to see what the next move is. But we haven't seen anything really stand out as an election trade just yet.
Interesting. I thought it was noteworthy that Tesla did report a recovery in China. I have seen some early data that Apple has seen a bit of a recovery, I believe, in China as well. And of course, that'll be a key story, I think, next week that could impact the major indexes. Jay, always good to get your take.
Good to see you.
Thanks so much for taking the time this morning. That's Jay Woods. He's the Chief Global Strategist at Freedom Capital Markets. Well, stay with me, because up next, the president of a production company is going to join me to talk about what goes into the preparation for a ticker tape parade, the size of that for the New York Liberty, in less than an hour today.
From From automotive to climate tech and electronics, 3M is working to build a better tomorrow through innovative solutions and first-in-class material science. We're going to find out how on this episode of Taking Stock. Here at CES, I mean, this installation is incredible. Let's talk about some of the most exciting products you're showcasing.
3M, at our heart, we're a material science company, and what we're showing here at CES is how we're actively building for tomorrow with our inventions, with our technology.
You've been working together with 3M for about 4 years now. You've been building this product that you're debuting here at CES. Let's talk about it.
So this is the world's first self-powered hearing protector. This hearing protector has my solar cell here on the top. This will allow you to harvest any light, indoor light, outdoor light, shade, when it's dusty, all kinds of lights,
Wow.
and charge the battery. This means we're saving, together with 3M, millions and millions of batteries over the lifetime of the product.
Now, as a customer of 3M, let's talk about the products that you utilize most.
What we do with Voltaire is that we develop solar panels with application in agriculture.
These right
Like
here?
the ones
Okay.
here. Exactly. In the agricultural sector, light is very important for the crops to grow. If you take away light, you're going to take away some of the yield of the crops. What we do with 3M and the way we partner with 3M is that we develop a solar solution specifically tailored for the needs of the crops. So we use the filter from 3M to separate the light coming from the sun. The part of the light that is necessary for the growth of the crops goes through. What is not used by photosynthesis is taken out and transformed into renewable energy. It's an entirely new opportunity of how to approach energy in the agricultural space.
Wow, so it's really making the world a better place.
Hopefully, yes.
What are you most excited about this year?
Changing the narrative in people's minds about what 3M is as a company.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the trading floor. Well, today we'll see one of the most iconic of New York City celebrations, a ticker tape parade. It, of course, is in honor of the New York Liberty's WNBA championship. And starting at 10 a.m. Eastern, the team, coaches, and other members of the Liberty organization will ride through the famous Canyon of Heroes. The parade starts at Battery Park right here in Lower Manhattan, and the route will continue up Broadway until reaching City Hall. Well, there the team will be the guests of honor at a celebration hosted by the mayor and the Big Apple. It'll mark only the 5th time that a ticker tape parade has honored women. The last time, in fact, was in 2019 when the event celebrated the U.S. women's national soccer team for their victory in the World Cup Championship. Well, ticker tape parades have a special place for us here at the Stock Exchange. It's because back in 1886, when the name was coined for the first parade of its kind, brokers down here in the financial district, including those at the Stock Exchange, tossed their used ticker tape out of the window and onto the celebrants who were excited to see the unveiling of the Statue of Liberty. It was a purely spontaneous event, but obviously it caught on. And in today's digital age, traders no longer use the so-called ticker tape, but no worries there because the tradition does continue. The New York Downtown Alliance is providing bags of shredded, recycled paper to all of the offices lining the parade route. So you can be sure that this tradition is living on. And for more of that, I want to bring in my next guest. Joining me now for what goes into executing a celebration of this size is Elliot Winnick. He's the president of Winnick Productions. Elliot, it's great to have you on the show this morning. And I know a lot of New Yorkers excited for this parade to kick off. City Hall Plaza preparing to welcome up to 3,500 guests to celebrate the Liberty's first ever WNBA title. What should attendees of this celebration know?
Well, the first thing is transportation is going to be critical. No cars should even attempt to come down there. NYPD had a no parking detail starting at midnight, and they were towing cars. And I assume by this time in the morning, they've blocked off various traffic routes. So mass transit's the way to go. And even then, you have to check, because all the different mass transit entities have changed their schedules. They're skipping some stops, and you can check with 311 or the MTA or Long Island Railroad or Amtrak or Metro North for how they've adjusted their schedules. But mass transit is definitely the way to go.
Elliot, we do have a image of the parade route here. I'm not sure if you've been able to take a look at it, but explain how this unfolds as the New York Liberty and those in celebration with them make their way to City Hall.
Well, yeah, on the parade, there's a formation area, which is all the local streets around Battery Park. That's where the floats assemble and the order of the parade is developed. And then obviously the route goes up Broadway, and there'll be a dispersal area for the parade floats as the honorees go to City Hall, where there's a special rally there. So a lot of the streets around Broadway will be closed, or almost river to river is my expectation. And NYPD, which has done this many times, they dusted off the old blueprints, but they've had to adjust for a few reasons. One, there's a little bit of institutional memory that might have been lost as officers retire, but there's been some changes since the last few parades. We now have city bike and bike share, outdoor cafes, and things that are what I call attractive nuisances. So the city's probably deactivated them or removed them, so people don't climb on them. Even street scaffolding, sidewalk sheds, I'm sure there'll be officers posted so people don't climb up on them. And this audience is going to be different than, let's say, the Giants parade. It's going to be a lot more women and young girls, and I'm sure they're taking that into account also.
It'll be exciting to see. Elliot, we know the Liberty did clinch the championship Sunday in Game 5. How does a celebration like this parade come together in such a short amount of time?
It's normally it would take 3 months to do this. When they do the New York Marathon or the 5-Borough Bike Tour, they have months and months of planning. I assume either late Sunday night or first thing Monday morning, there was an interagency meeting at City Hall, and all the various agencies that get involved, with NYPD being the lead, get involved. But you have the Department of Transportation, Department of Health, you have Fire Department, EMS, all the transit agencies, OEM, the Office of Emergency Management, and something like DOT. They survey the route, they fill in the potholes, they're looking down to see if any obstacles. So they got to mobilize. They have to, Department of Buildings has put in an embargo for any construction work that might have been taking place on any buildings on the route. They've probably canceled any crane activations. So all the agencies have to do an embargo or adjust. EMS, I'm sure, has multiple ambulances and EMTs on gators on the route. So they all have to pretty much stop everything and mobilize on a dime. Even the rally at City Hall with 3,500 expected guests, that's a ticket only. So they have to create an invitation list and get those invitations out. So I'm sure that people have lost a lot of sleep so far.
Probably. It is a very tight turnaround, as you mentioned there. And we've seen New York City host more than 200 ticker tape parades in its history. The latest ones being to honor frontline workers during COVID in 2021. And then before that, as I mentioned earlier, the U.S. women's national team for soccer in 2019 after it did clinch the World Cup victory. What are lessons learned from those previous events to ensure that today does go smoothly?
Well, there's always an after-action report and meeting where the police and all the agencies review everything and make adjustments. One of the biggest elements that's always kind of an overlay on events is counterterrorism. Every event in New York City has a counterterrorism overlay. So there'll be blocker cars and blocker trucks, sand trucks on all the side streets leading up to the parade route and bottling it north and south, so they don't have to worry about any vehicles, either accidental or intended, that drive through the parade route. NYPD, I'm sure, will have their aviation unit up, their helicopters, they have a drone. They have counterterrorism people that'll be in the crowd, plus the regular traffic division and all the other things. So they're aware of things. Their intelligence division will be monitoring for any potential demonstrations or protests, which is a fact of life. Whenever there's TV cameras, there's a possibility of different protest demonstrations, which might be unrelated to women's basketball. Just that's the way it is right now.
Elliot, so good to get your take. We are rooting for the Liberty and excited to see this parade unfold today. Elliot's the president of Winnick Productions. All right, well, stay with me because up next, we're going to dive into the space economy after the New York Stock Exchange hosted a space summit on site yesterday.
So, Carla, it's Climate Week. Tell me, how's it been going? Do you have any key takeaways?
Yes, I've really been enjoying Climate Week. It's such a rare opportunity to get everyone from around the world together to think and talk about climate change. So one big takeaway for me is that there are more technologies than ever to help us better measure greenhouse gases, monitor, as well as reduce emissions. And AI is actually enabling those technologies to do even more and to lead to more productivity. One of my other takeaways is that common policies and approaches really do help. And so it's been nice to think globally, but also act locally.
Now, Carla, tell me about PG&E's climate goals and what's unique about the role a utility like PG&E can play in addressing climate change.
Well, PG&E is committed to having a net zero carbon energy system across our electricity and gas system by 2040. And in order to do that, we've made some commitments through 2030. So by 2030, we'll have reduced our Scope 1 and 2 emissions by 50%, our Scope 3 emissions by 25%. And we're also focused on helping our customers reduce their greenhouse gas footprint through energy efficiency and electric vehicles. And what's unique about a utility doing this work is that we're going to fuel decarbonization. So it's our role to make sure that the grid is ready for all the EVs, for the electric buildings. And I'm really proud that recently, in a recent decarbonization ranking, PG&E was ranked #1 utility in terms of our decarbonization efforts.
Now, accelerating electric vehicle adoption is a big priority for PG&E. Can you share why and what steps you're taking?
Well, reducing greenhouse gas emissions in the transportation sector is key. 40% of California's emissions come from transportation, and 1 in 7 electric vehicles in the country is in our service area. We also know that the more EVs we have on the road, that increased load helps lower the price of electricity for everyone. So we're focused in a couple of areas, preparing.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Well, the space economy is expected to reach $1.8 trillion by 2035, according to a report out in April from consulting firm McKinsey & Company. Of course, it opens up commercial opportunities as space-enabled technologies advance. It also promises to address some of the world's greatest challenges, like climate change. Yesterday, the New York Stock Exchange hosted a space summit with executives, investors, and entrepreneurs. And together they discussed how these innovations can drive business and society forward. Sierra Space was one company in attendance, and its CEO Tom Boyce joined NYSE TV's Trinity Chavez earlier this year to talk about how the company is leaning into this new frontier. Let's take a look.
Tom Boyce is the CEO of Sierra Space, a leading commercial space tech company that is building a platform in space to benefit life here on Earth. And he is joining me today to talk more about it on this episode of Taking Stock.
Sierra Space is it's a revolutionary space tech company. We're completely vertically integrated inside the company. And we're also the next generation defense tech prime. We really see that we're on the cusp of the most profound industrial revolution in history. And what our company brings is a full platform and technology service to offer space as a service to our customers for the next generation of biotech and industrial tech products.
So Tom, you've been with the company nearly 3 years now. Can you talk to me about some of the biggest priorities that you've achieved and what you're focusing on this year?
The priority we've had over the last 3 years is really to focus on de-risking the portfolio, de-risking the business model, the technology stack. We've been growing a great leadership team, focused again on the commercial and civil side of space, but also on the defense tech side. In 2021, we did our Series A to fully capitalize the business at $1.4 billion. We followed that up with a Series B raise about $300 million. So we've raised about $1.7 billion to date.
What do you think is driving such success?
It really is because we bring such a revolutionary different approach to think about our space plane business, right? Our Dream Chaser product line. We're revolutionizing the way that people and cargo come back from space. If we think about, we've been bringing people back in sensitive cargo since the 1960s in a capsule and plunging them into the ocean. We come back and land at commercial runways. Very, very different. We're thinking about reinventing the space station and the in-space infrastructure. And we bring that commercial mindset and advanced technology to the defense side. And that's why we think about over the last really 10 months, we've announced we've won $1.3 billion in new contract awards as a prime contractor, going up against the big defense primes and beating them. So I think that's got a lot of excitement in the company. We've made a lot of progress, a lot of momentum, and I think that continues to get people excited about the stock.
So what can you tell us about this new winged vehicle? What makes it so significant?
The first vehicle we call it Tenacity. The second vehicle is in production. We call it Reverence. Tenacity, it's again, it's the first of its kind. It's a completely autonomous spacecraft. It acts both as a spacecraft and an airplane. We're not building just the first commercial space plane. We're actually building the first commercial space liner. And the ability for it to come back and land anywhere a 737 MAX can land or an A321neo, it just gives you thousands of places to land across the world. And our customers really like that.
Incredible. I mean, what are you designing anything else that's going to be coming out in the next few years?
We're designing the first commercial space station.
Amazing.
Which, again, it really thinks about reinventing the space station. And we use inflatable technologies. Again, the first space station went up in the early 1970s. Every space station until now has been built with hard-walled metallic structures. And we just don't think it creates the right economics. So if you think about SpaceX, they really changed the game around the cost per pound to get things into orbit.
Yeah.
We're changing the game inside of orbit in terms of what the cost per cubic meter of actually doing work. So the first biotech labs, the first industrial tech labs, now is the time where the economics allows companies to go to space to invent their next products.
So what would you say is your biggest motivator behind that?
Well, we look at what we're trying to do, and we just think this planet is very unique. We're not the company that's trying to get to Mars. We're not the companies trying to find a way to have just billionaires, doing tourism in space. We think about 8 billion people on the planet. We think about oncology. We think about longevity. We think about the next generation of energy and battery technologies that will do really great things for humanity. And now we're on the cusp of actually being able to do that with the work that we're doing in transportation technologies, in space infrastructure. The way I like to think of this is in the biotech industry, the terrestrial market, it's a huge market. And a lot of what happens in the terrestrial market, biotech, is through contract research organizations, right? That's where they do the early clinical trial work. We're the first CRO in space for the biotech market. We're the first contract manufacturing organizations for industrial tech in low Earth orbit.
And I want to talk to you more about, just how human civilization is really entering the orbital age. What did you mean by that when you said it?
Yeah, we think of orbital age where people are now, instead of just a handful of astronauts going to a government-owned space station, we're talking about commercialization of low Earth orbit, where you connect low Earth orbit and terrestrial markets in one market now, where people are very used to living and working in space in factories, and we're taking factories off the planet and we're putting them into space. That's going to really revolutionize the way we think about space going forward.
Very important work. Well, thank you so much, Tom, for joining me on Taking Stock.
Oh, thank you so much for having me. I really enjoyed it. Thank you so much.
Our thanks to the CEO of Sierra Space, Tom Weiss, for that interview. A sit down back in April, of course, the same time that we in fact saw that report come out from McKinsey estimating a $1.8 trillion space economy by 2035. There aren't a lot of pure plays in the public market when it comes to space. It is a new frontier, but SpaceX, by and large, the most richly valued pure play space company with a valuation, I believe, of upwards of $160 billion. From satellites in commercial use to perhaps residential use someday as well. These are the main storylines building around the space economy. And you might be hearing the cheering behind me. That's because we are just about a minute away from the opening bell. Ingram Micro set to retap the capital markets and return to trade after it was taken public roughly a decade ago. This company priced shares at $22 a piece last night, raised $409 million, looking at a valuation of $5 billion, and is one of the leading IT solutions provider. My colleague Trinity Chavez, who you saw on air earlier, is actually working with Ingram Micro today. That's why we haven't seen her on the show live just yet, but we'll check in with Trinity a little bit later in the show to hear how this company is feeling, of course, leading into the debut today. So Ingram Micro, most recently owned by a private equity firm. Again, we'll see how the appetite is consumed in today's trade, but we are looking at a mixed open, and that comes after stocks had consolidated some of their very strong gains of late. Monday through Wednesday, we had seen the major indexes lower. Today, we're looking at a mixed open. The S&P 500 set to open higher, and by and large, these stocks still within striking distance of record highs. I'm going to be joined by a technical analyst on the other side of the bell to talk more about what the charts are telling us. Frank Capillari, it'll be good to get his take, of course, as we are just about to open for trade. And with that, let's take a look at the podium for the opening bell. We are officially off to the races. The stock market open for trade. A lot of cheers on that opening bell podium. We just saw Paul Bay, the CEO of Ingram Micro, celebrate the open. Again, for this company's IPO, an official return to the public markets. What is the world's largest technology distributor, whether measured by revenue or really by global reach? Describes itself as a people-first technology firm, has over 24,000 full-time employees and operations in 57 countries, with the company extending its global reach with more than 134 logistics and service centers worldwide. It was founded back in 1979, became the first IT distribution company to reach $1 billion in sales, reaching that goal in just a decade's time. Well, fast forward to 2018 when the sales number reached 50 billion. And over the years, Ingram Micro has completed over 40 acquisitions, evolving from an IT products distributor to AI provider of integrated, customized solutions. The company today, along with its partners, reaches about 90% of the global population with its technology solutions. And it's focused on becoming a one-stop shopping experience. To achieve this, the company has invested more than $2 billion into a variety of resources, including intellectual property, digital processes, and professional services. Continues to grow and evolve, of course, to meet its customers' needs. And in 2022, the company introduced Ingram Micro Xvantage. Now, this fully automated AI-powered digital platform streamlines and expedites business to consumer processes, such as order updates and vendor management. The company is environmentally conscious, working with resellers and retailers, taking steps to advance environmental sustainability by collecting and repurposing e-waste. It refurbishes, resells, and recycles electronic devices and has changed ownership a few times in the past years. Most recently, it was purchased by and was owned up until today by Platinum Equities. But of course, for our viewers, we know this is going to become a publicly traded stock once its shares reopen for trade, probably in just a few hours' time, again after pricing in the middle of the range last night at $22 a piece. All right, well, stay with me because up next, I'm going to be joined by Frank Capillari to talk all about what the charts on the major indexes are telling us about where we go from here, what it means for you and your money.
I know you have a big event coming up. We'll get to that in a moment. But for those that are listening in who maybe aren't following ETF Express as closely as I am, could you tell us a little bit about yourselves?
Thank you so much. So ETF Express was founded in 2006. So it's been going a really long time. And that was in England. But we are a global title. We've been writing about ETF launches and interviewing managers and issuers and service providers around the world since 2006. We launched awards in Europe in 2010, and we have an unusual method of organizing our awards. We're not pay to play. We have a qualitative and a quantitative screen for our awards. So if you're an issuer, you get to be nominated by our data partners, Track Insight, and then you go through a voting process from your peers. And if you're a service provider, you can nominate yourselves, but then you equally go through a voting process from peers. So it's not pay to play, and it's not sort of going into a dark room and with a committee and coming out with a random, obviously strong, but ours is voting. We like that. The firms with the most votes win. So we've been doing them in Europe since 2010, and then we launched them in the US in 2019. And then, of course, we had a couple of years where we did them from home, which was, an interesting experience, but not the same. And then we added in Canada in 23, and we're very much hoping to expand into Asia next year. And if you win an award, you get to come to our party, which is the awards event. And our one for the US this year will be on the 24th of October. If you don't know about it, I'm sorry, it means you haven't won one. But also, you're sworn to secrecy. So there's this kind of, tricky thing there. Tricky not to.
Welcome back to NYSE TV Live, everyone. I'm Kristen Schuller here in studio. Well, as the stock market has officially opened for trade, I want to bring in the chart expert, Frank Capillari. He's the founder and president of Cap Thesis. Frank, we've been talking so much about fundamentals, the economy, earnings, factors like that have been driving the market as stocks sit near record highs. But I know you've got the know-how when it comes to patterns and charts. What are the charts telling you about the S&P 500 right now?
First of all, Kristen, thanks so much for having me. Great to be here at New York Stock Exchange. And so for the S&P 500, I think we should take a look at the big picture first. So the big picture is that we had a big breakout in January, and at the time, it triggered an upside target of 6,100. Now that's looking at a pattern that had to form over the last year and a half or so, and the breakout zone was 4,800. Now the thing with pattern breakouts is that they're always tentative until proven otherwise. So we didn't know if this one was going to work out, but as we know, from that point, the market extended higher. That gave the S&P 500 the ability to back and fill when it needed to. As we know, that had occurred a number of times since that point, in April, and again, of course, over the summertime. So along the way, we want to look for just smaller patterns to develop. And from the October low of last year, by our count, there have been 9 different successful bullish patterns, meaning that we have the pattern form, we have a clean breakout, meaning that the pullback does not negate that breakout zone and an upside target gets hit. That is the crux of how uptrends are formed. And so right now, of course, we get to the point where we're in October, and if you look at the entirety of the move from 2 years ago, October 2022, the S&P's really been within this upper sloping channel and it oscillates between extremes. And the biggest drawdowns have occurred when the stock or the stock index is near the upper line. So it's near the upper line now. It's not every time do we have a pullback, but the biggest ones have come after we extended up there. So what can happen at this point, I don't expect the market to really take off and go through that line. If it does, that means we're in a very exuberant phase. But I think more consolidation around this point will kind of bring it off of that extreme. And of course, the other part is if it needs to pull back much more than that. And again, we can talk about the factors related to that as well.
Let's talk about those factors. We had seen, as I mentioned, the S&P 500 down the first 3 days of this week, but came after 6 straight weeks of gains for that index and the Dow, and the best weekly winning streak that we had seen all year. What are some factors that could potentially turn this consolidation into a deeper pullback?
Well, one of the things to look at is volatility. Now, we can talk about the VIX, but another way I like to look at it is looking at the number of 1% moves the S&P 500 has on a rolling monthly basis. Because the thing about the VIX, when does it go up? When the market goes down. But it really fails to capture upside volatility. And that's important as well, because when there's volatility, it's two ways. We can go back to 2022 and see that year we had nearly 130 absolute 1% moves and just about equal amount of 1% declines in gains. So right now there's been a different story. It's been much lower. The only time we had more than 8 in a month was August. There was 10. And remember, that started with 3 straight declines, or much more than 1%, and then 7 1% gains followed it. So to me, that's back and forth movement, and that is a lot of two-way volatility. So the best case scenario, of course, is that you get a market where it just continues to go out little by little like we saw in the fall, or I'm sorry, in the beginning stages of this. So what could cause a bigger pullback at this point? When a breakout fails. So we have 2 different targets on the market right now from a lower point, but we just had a breakout of 5650 for the S&P 500. If that gets undercut, that would show to me that the behavior potentially has changed, and we'll have to see if there's no bearish pattern start to form.
People might be wondering, our viewers, are the charts truly indicative? Can they truly provide signals as to where stocks are heading? What would you tell them?
Probably going to give you a biased answer at this point. Well, my first boss, Alan Shaw, had a great quote: "In price, there's knowledge." Because sometimes we don't know what is driving anything, but if you see a stock or a sector outperforming for some reason, eventually a story comes through. You may not understand it. And that's why a lot of times people can have the best thesis that eventually could play out. But in the meantime, the stock will go back and forth or maybe outperform for a much longer time than we expect. And we have to respect those trends. So some people like to use fundamentals to get the ideas and to help trade it, or timing-wise, technical. So they both can work.
I want to talk more about the yield because there have been conversations as the yield rises that we might see fewer rate cuts by the Fed, a level of 4.2. What does that mean from a chart perspective?
Yeah, 4.2 is extremely important. Anyone can see that on the chart going back to the last 2 years, because now we're right back up to it. Right? And so that's been a level that's not only been resistance, but support as well. And you can use technicals the same way on rates as we do stocks. And for right now, For me, that's just a line in the sand because it's taken a long time to get back up there. Now, the other part of it is how fast this has happened. Right? It's happened, as we know, right after the Fed cut rates for the most part. People are wondering why. So the question is a move like this indicative of a much bigger advance in yields, or is it just a reflexive move for whatever reason? So I think what we have to look at, sometimes you can put technical indicators on this as well, and from that perspective, the 10-year yield is overbought, right? And so if you look back at what's happened to overbought conditions in the yield over the last year, the yield has been coming down over the next few weeks after that. Now, that's important to realize, but also what happened before this. Now, we remember 2022, one of the biggest rate hikes in history, and the yield was moving up in an accelerated clip. And so during that time frame, there were a number of months when that overbought reading routinely happens. So what we don't want to see, of course, is that be the case, where I do expect the yield to come in, just a matter of what's the next move there? Is it going to continue to produce overbought readings? If that is the case, that shows that investors are expecting more inflation, and you're going to be reflective in yield. And I think the Fed would have to pay attention to that.
I want to talk about the small caps because even as we've seen this bull market recently turn to the S&P 500 up about 60% in the past 2 years since that October 2022 low, small caps have struggled to keep up. We saw a little bit of a recovery over the summer. What is the Russell 2000 chart telling you right now?
I think it wants to break out long term. Now, let's remember too, it's really done pretty well from the October 2023 low. So about 40% from that point, just about what the S&P 500 is doing, it just has done it in pockets, as we know. And so if you look at the chart there, we know it's up that much. For it to get back up to its former high, it would have to be up 50%. That's a huge move. But if you look back to the last number of years, it's done something very similar. It's taken its time, it's come off a high, taking sometimes years to come back to it, with very strong moves to that point, and then seeing extremely strong percentage moves over the months and years that follow. So I wouldn't be surprised to see that again. The question is it going to outperform the S&P once it gets to there? Because if you put a relative line of, say, the IWM, Russell 2000 ETF, versus the S&P 500, every time that the Russell has broken out on an absolute basis, it continued to move lower versus the S&P 500. So I think you really need to see a lot more from the Russell on a continuous basis to believe that long-term trend of underperformance versus the S&P is going to change.
Frank Capillari, founder and president of Cap Thesis. Frank, so good to get your take as someone who has studied the charts for as long as you have. We really appreciate it.
Thanks, Kristen.
All right, well, stay with us because up next we'll have a lot more, including a look at what is behind recent moves in NYSE listed stock Disney and Tesla after earnings last night.
So, Meredith, bond ETFs were created to provide easier access to fixed income markets. And over the last few years, they've helped facilitate liquidity in the bond market. So how have ETFs impacted bond pricing and liquidity?
So there's a few key elements of the ETF that I want to highlight that explain how they're additive from a liquidity perspective. So the first point is the create redeem mechanism, which allows for primary transactions. It's the hub of the wheel, and it allows for us to efficiently transfer risk. The second element of this is the price discovery vehicle, and the price discovery vehicle has led to the development of algos. The other thing to think about is that the growth of algo trading, the growth of portfolio trading, the ETFs are the hedge for that. So as we think about credit market structure, all three of these things will grow together. So if we look back over the last 5 years, there's been some pretty prominent shifts within the credit markets. The first is PT, portfolio trading. ETFs and ETF options are the fastest growing segments within credit markets. The other piece that really stands out to me is portfolio trading as a percentage of cash bond markets is now about 8 to 9%. Just 5 years ago in 2020, that number was closer to 2%. If we look at ETFs from the same prism, ETFs are now, from an IG perspective, 15% of cash bond volumes. That number is up from 7% in 2020. And high yield ETFs have also shown similar growth. They're now accounting for roughly 30% of volumes. That number used to be about 20%.
So let's fast forward to today. There's been a lot of innovation in this space. How have innovations such as thematic or actively managed options altered trading strategies? And what do you see as the associated risks and rewards?
That's a great question and very topical. If I put on my ETF hat, I really think about the product evolution in ETFs in chapters. So the first chapter, there was a lot of index beta products that were offered to the market. The second chapter was...
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the trading floor as we are officially open for trade on this Thursday. And technology is always in focus for us here at the NYSE. Well, as we approach peak earnings season with tech reports set to really ramp up, I want to bring in one of Wall Street's most well-known analysts. Joining me now with more is Dan Ives, Senior Equity Research Analyst at Wedbush Securities. Dan, it's great to have you on the show this morning. We will get into Tesla results last night, which I know you've been following. But I first want to ask about the NYSE-listed stock. Disney certainly has been in the spotlight the past week amid news of its CEO succession plan. What does this mean for the media company?
Look, I think it's potentially a transformational time. And with Iger, obviously giving back the reins with a new CEO coming in over, the next, call it 12 to 18 months, it's a pivotal time for Disney. I mean, in terms of where we are, in terms of from its properties, from the streaming, from a cost perspective. And I think it's a fork in the road, but I think it's potentially a positive fork in the road. I think that's sort of my view. A lot more could go right than wrong, given the positioning here.
Interesting. So we see former Morgan Stanley CEO James Gorman now elected to the board to steer the succession plan in the right direction. He had a lot of positive feedback, of course, with a succession plan at his former company, Morgan Stanley. How does that set Disney potentially up for success?
Look, you want to pilot on the plane that you feel comfortable sitting in 3A watching Netflix. And the point is, Gorman is someone that Street has confidence in. His record speaks for itself in terms of his career. And I think ultimately they're going to pick the right individual, whether it's internal or external. But this is, look, the next decade at Disney will be defined by ultimately who is in that CEO seat. And I think when you look at some of the things they're doing on the ESPN side and some of the properties, I think there's definitely some shoots of growth, in terms of where things are. They definitely have headwinds, but Gorman, I think, is going to soft land this airplane.
So we had seen Disney recently up prices on its streaming service by $2 a piece. Consumers seem to be resilient, but with so much competition out there in the streaming space, do you think that will prevent churn and keep customers around?
Yeah, I think churn will still be pretty minimal. I mean, they've had some churn in the past. It's pretty stable. Obviously, a lot of that is content driven. But we've seen, look, Netflix has raised their prices. I mean, this is ultimately, as the price of content's gone up, it's what Disney needs to do. But they need to monitor churn because the golden goose for Disney is monetizing its install base, whether it's on parks, streaming, other properties. And I think that's something that investors want to see. And on the streaming side, then they made some big bets. But that's the right move, I think, to raise prices, just given especially the cost structure.
Mm-hmm. How crucial is streaming to Disney's business? Of course, it is a media and entertainment company, but has its hands in other verticals as well.
Look, I think you could look at it from a top line and be like, it's not as significant, of course, as the parks and some of the core properties. But I think from a stock perspective, it's significant because from a multiple, investors want to see where the growth is. Streaming, content, how could ultimately Disney create the other growth drivers in the future? And I think streaming and content is going to be one of those core paths. And that's why I think it's been the right move to almost double down on that strategy the last few years, despite obviously a lot of critics. But now you need a CEO. Maybe there's other assets that strategically, they sell or go away. But you need sort of the new path of growth for Disney over the next 5-10 years.
Look, I do want to turn to Tesla. That stock just continuing to climb since its better than expected report last night. Currently, shares up about 17%. We're looking at a market cap gain of more than $100 billion in just less than 24 hours. What was behind these results? Can this momentum in Tesla be sustained?
Yeah, I mean, look, I thought that was an Aaron Judge-like quarter. In terms of margins, that's really been the headwind here. In terms of the price cuts, and that's been a big overhang, and they crushed margins. I mean, beat by 200 bips. Looks like that trajectory is going stronger into next year. the delivery growth that Musk gave, I mean, 20 to 30% delivery growth for 2025, that's almost double, where the street was from a whisper growth perspective. I believe this, I mean, you've talked about this before, this is an inflection point time for Tesla. Huge step ahead in terms of what they delivered last night. And I believe it's get the popcorn out, because as you get autonomous, AI, a lower priced vehicle, a lot of growth drivers, and the bulls, music to the ears for the bulls this morning.
I want to talk about China because that is a key growth market for Tesla, for other tech companies set to report, like an Apple, for instance. What did we see play out in that market that was able to give Tesla the lift that it has today?
Yeah, I mean, China's the key part of the growth story this quarter. I mean, it was the best month, September, they've ever had, best quarter they've ever had. I do think what you're seeing in China, I mean, even our iPhone checks, and we'll see this from Apple next week, China actually looks strong for Apple. Clearly, a lot of issues that we're seeing in China, very choppy macro, but I believe there's spots that we're starting to see growth. And that's a positive, especially when it comes to Tesla, especially when it comes to Apple, because China's the hearts and lungs of these growth stories when it comes to Tesla and even when it comes to iPhone.
I've seen more and more Cybertrucks on the road here in Manhattan. It is a very large, futuristic vehicle, of course, for city life, Dan. But in terms of what we're seeing, the momentum behind the Cybertruck, and a headline that I saw yesterday that the Cybertruck actually achieved profitability. Do you think that is becoming core to Tesla's strategy ahead?
Look, it's a showcase car. I mean, it's one, like, just like you said, if you see a Cybertruck pull up to a valet, little silence, right? And that's part of the cachet of Tesla and the brand they built. Now, in terms of the overall demand story, 2 million vehicles next year, Cybertruck's still a very small piece. But it does speak to, it's not just about Model 3. You got Y, you got what I believe Semi, you got Cybertruck. You're going to eventually have Cybercab in 2026. They're expanding the portfolio. And that's why, I believe, especially when it comes to AI autonomous, it's the most undervalued AI name in the market.
Interesting. Well, certainly more richly valued here in the past 24 hours or so. Again, a market cap just under $800 billion this morning. As of close yesterday, about $680 billion. We could talk about Tesla forever, Dan, but looking ahead to earnings season picking up, more technology companies on the docket to report. What else are you looking out for from tech companies this earnings season?
I think get the popcorn out. I think we are going to have a robust tech earnings season. I mean, AI, it's the biggest transformational growth theme we've seen in the last 40 years. Mag 7, especially when it comes to the big cloud players, Microsoft, Google, Amazon, I think are going to have robust numbers. I think Apple is going to be strong as well, especially going to the holiday season. And we have an election, so there's some volatility, but I think tech rips higher into year end because of the fundamental stories. In this AI revolution, it is still early days of playing out for the rest of tech.
All right, Dan Ives, Senior Equity Research Analyst at Wedbush Securities. Dan, always a pleasure. It's great to see you. Thank you. All right, well, stay with us because up next, I'll get a check on things from the floor with my colleague, Trinity Chavez.
Quantum Health is the category creator for healthcare navigation, where we supply healthcare navigation for the largest self-insured employers in the country.
I want to talk about your business strategy. What would you say is your strategic focus over the next 3 to 5 years?
Our focus is really around how do we create the best healthcare experience for members, because healthcare is incredibly complex and hard. It's continuing to be complex. Our role is to take that complexity and simplify it for our members and try to create better experiences, more engagement, and drive better clinical and financial outcomes.
Tell me more about your culture and motivation at the company. What inspires you and how do you remain innovative and ahead of the curve?
Culture is everything. So you can feel it when you come into our shop. You can feel how people are warrioring on behalf of our members to get the best out of their best benefits for the members, try to create that experience that's better, take the scariness out of healthcare for them. So culture is everything. We invest heavily in our warrior culture That's a big key element. It's probably the piece that doesn't show up on my balance sheet or income statement, but it's the most important part. And then the innovation side of this is how do we take the problems that our clients are seeing in terms of costs and try to drive those cost elements out. So we're constantly working with our clients and thinking on our own, what's the next best thing that can make a difference both from an experience, an engagement, and a financial and clinical outcome.
Can you share some real life examples of some of the work that you're proud of or
Sure.
key milestones that you've achieved?
One of the big key elements is we're seeing in our clients is pharmacy costs have gone up significantly. So you may have seen some things around GLP-1s and specialty meds. I can tell you from a pharmacy trend perspective, that is significantly hitting our clients. And so what we've been able to do is
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. My colleague, Trinity Chavez, wrapping up her commitments with Ingram Micro, set to return to the capital markets here earlier this morning, joins me now live on the floor. Trinity, what's on your radar as we await for the stock to open?
Well, we have been covering the IPO all this morning, Kristen, which is why I haven't been able to join you more on the show, but I just wrapped up conversations with the CFO and the CEO, obviously talking about how this is a huge monumental milestone for the company, but for the broader tech sector as well. The whole tech sector is about a $3 trillion industry, and now this IPO is really signaling that this is a strong market and hopefully will lead the way to more IPOs in the tech sector. And we were also talking about their business strategy moving forward, but also just how it takes a hugely committed team of the over 24,000 employees who are tuning in all around the world to witness this IPO here at the New York Stock Exchange, rejoining our NYSE listed community of over 2,400 listed companies, again, making us the largest exchange in the world in terms of market cap, over $40 trillion in total market cap that we have here. Many of those companies listed with us also in the tech sector, but again, it's just the celebration is continuing as we continue to follow the price discovery process. Just a few feet away from me, we spoke to Pete Giacchi, the head of Citadel Securities as well, who is going to be doing the price discovery process. He is the designated market maker, Citadel Securities, for Ingram Micro today. But it was just an exciting day, but I think it just about does it for us here on the show.
Exciting indeed. We are going to await that open. Trinity Chavez on the floor. Thank you everyone for watching. I'm Kristen Scholler in studio.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.